Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Either way, you should be out of that trade at that point and looking for the next opportunity. As we said, U.S. dollar against British pound was a big winner in '08 for the full year. We can see as of this point in March of '08, it was back to about even for the year, but it was on its way to be a much bigger gainer. So the bottom line is it was good not to be short an index that was wanting to go up. Here was we'll look at the more updated charts. This was when they had ISE had just launched the U.S. dollar against the Aussie dollar, the AUX pair back there early '08, and you can see we were just starting to get data, and this was a case where I said, look, I didn't want to make a trade yet because we had just gone overbought, but then we weren't getting that follow-through above that high. That's why I like to look at not just the bands, but also the % R treatment, because it really tells me when you're still kind of stuck in that trading range mode versus when you're in a more of a trend that's getting ready to kick into gear. So I'm going to try to share my desktop here in a second, but I'm also going to answer any questions you have. But I did want to mention that an extra bonus you get is for attending today's presentation from us at Big Trends is you can get 2 free weeks of my popular Option Shark daily update service. So if you just go to this link that's listed here on the page in yellow, and I'll type it in as well, that you can go to that page, and it's a special Big Trends URL that we set up, so that's why we called it bturl.com/slides, and you'll see it'll give you an alternative to get that. No credit card required or anything, just basically a nice little bonus for you to see what I do and what I'm thinking about the overall markets, as well as any trading ideas that I might have over the next couple of weeks at no obligation to see how we do things at Big Trends and educate you along the way. So another question comes in from Richard saying, do we have a new letter on FX options? Actually, we're working on one right now, Richard, so I'm glad you asked, because we've been doing a lot of data testing on it, going back over years' worth of data, and so we're in that process of really hoping to get that out to folks as soon as it's ready. So that's what we're looking at. On the closing stop, somebody said if it trades below that key level in the last 15 minutes, close the trade. That's correct. So a closing stop means if it's a bullish trade you're in, say a call, and it trades underneath that key level in the last 15 minutes, you're saying, well, it's not holding it like it should, just get out. If it's been below there during the day, but then it's back above there in the final 15 minutes, we're saying hang in there. That was a fake out. A lot of people got flushed out. They'll probably be rushing to get back in as long as that level holds in that last 15 minutes. And before I share my screen, just a reminder about all the great resources that you also have there at the ISE.com/FX and all those other good ISE.com spots. You've got the ISE.com/podcasts, which FX Options Weekly Outlook. You've also got trade alerts through the ISE.com/FX. More information on the webinars, ISE.com/webinars. The archives, you can see the /archives. And so basically just a whole load of educational resources for you straight from the ISE website. So I think you'll find that very, very valuable. Steve, if we've got a few more minutes, I'd love to share my screen. Hopefully I can do that from here and then show people where I'm seeing the current, the Big Six here.
Bryce, that would be great. Yeah, I think you just hit it. And, share desktop. Yep. Share desktop, I believe.
Okay, let's try share desktop, see how that works. And it looks like it's working here. So we pop into, this is on TradeStation. And so hopefully
you can trade this. Guys, everybody should know that you can trade this via TradeStation also. So there are a lot of places to trade. And, Price has TradeStation, and you can trade it. If you have an account there, you can trade this right through TradeStation, among other brokers.
Great. And so you can see, here's a great example. I'll just kind of put my cursor down. You can see back here where % R went overbought back in October, as an example, this is a daily chart of CDD. This is remember, the U.S. dollar against the Canadian dollar. So you can see that went overbought right there at about 90 on the percent R, so that's over that 80 threshold. So we'd use that high of that bar, which was on the CDD, 108.09. And this is beautiful. It tells you down to the penny what you're looking for. If you'd like to learn more about my percent R methodology and all the different tweaks I use for percent R, we actually have a 3 DVD course on percent R that we just launched recently. Just call us at our 800 Big Trends number to get more information about that. But basically, 108.09 is our key level. Next day, it closes 108.04. Well, that's not quite enough. Even though it's above there during the day, it's got to close above there. The next day it does, and it's starting to accelerate outside the acceleration bands there at 110.04. You think, oh, no, I've missed it. It's moved up a couple of points. Guess what? The reality is you want something that's starting to prove that it can move. You can see how we're breaking outside those acceleration bands there in early October. This means the U.S. dollar is starting to really pump up against the Canadian dollar. And so from 110 on the percent R confirmation, and actually the second bar above was the acceleration bands confirmation, 110.54 at that close on October 7th. Look where we went. We went from 110 up by October 27th up to 129.72. So basically we hit almost 129.90 the next morning, so almost 130. So that was a phenomenal move over the course of less than a month. Even while the U.S. market was tanking, the CDD, U.S. dollar against Canadian dollar, was actually doing quite well as a safe haven. You can also see, of course, this nice little retest that we had where we clicked right back in here, back under the 80 threshold. If you'd missed that first little wave up, this low and this little red candle here back on the 13th of October was your new closing stop, 114.73. You'll see this all the time where the next morning it opens below there. You can't overreact during the day. You've got to wait for the close. That's why if I tell people, if you follow the hourly chart, sure, you can do this every hour. But if you follow the daily chart, you've got to wait for the daily close, and that's why keep waiting for the daily close. You wouldn't get flushed out like others that were setting their stops off of the 114.73 intraday low when it trades down to 113.12. You're not getting flushed by that because it's the closing stop that matters. It closes back over 116, so you hold that 114 and change real nicely at the close, and you're still on board that monster trend. You can see ever since we get a move up here over the 80 threshold, it would not follow through. So we don't take that trade because from 1120 setup, we call that a setup bar because it doesn't close above that high at 129.75, not coincidentally right back at the old resistance near 130. You can see the same thing happens yet again here. We go above the 80 threshold, tries but fails to get above this new high here, 127.97 the next day. Look at that. It got all the way to 130.07 and closed under 127 at the end of the day. So that's a classic attempt that fails. Look at what we've just had here about a week ago. Got up to the top of the range and then failed up there. So this is still a trading range situation. You can see that fits within the bands. You can see we're stuck at near the top end of the bands right now at about 127, lower end of the bands about 117.5. This is where you could also construct spread strategies. Say you were doing maybe credit spreads outside of the bands, betting it wasn't going to break outside of that range. Maybe if it tests up into that range, you could do up to the top range, you could do a call credit spread a little bit above the market where you sell an out-of-the-money call, buy a little further out-of-the-money call to protect that, collect a little premium for that. But, most of my focus is on these windows like we saw back in October. If we look at our other big ISE FX pairs, we mentioned the British pound was real good last year. That's $BPX.X on the trade station. You can just see how persistent this was. If I go back a little bit on this chart, you can see really just a beautiful period that kicked in back in August for BPX. It was set up at 51.02 and then broke out there at 51.16. You can see it went all the way up to 57. That was a big, about 12% rally in it in under a month, or right about a month there. Well, those are big moves for currency standards. There's a classic retest after a breakout. It pulls back as a retest right here, 57.37. Has a classic fake out below there the next morning and then shoots back up. So it gets you on board for the move from 57 to 64.93. At least taking a chunk of that move.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.isc.com/podcasts.